Well, hey everyone. Thanks for joining me today. I'm Kevin Davey, and today I'm going to talk about flipping it. And what do I mean by that? Well, it's going to be doing something a little bit different, using entries as exits, which not many people do. So we're going to talk about it. It's kind of an interesting little topic. So what I'm going to give you today is this concept that most traders that I talk to, most algo traders, just ignore this. Uh, People seem to be mostly focused on entries. This is something a little bit different. And if you incorporate this, if you do a lot of testing now, you can literally double or triple the amount of things you test, So let's just say you're looking for new ideas and that kind of thing, and you're running out. Well, this is a way to really have a whole lot more strategies you can test. And then at the end, I'm going to talk about using this as part of a testing development framework that everybody should be doing. You should have some type of process that you are using that gives you good strategies. And if you don't, well, you got to take a step back and think about what you're actually trying to accomplish. Most of us want to build good strategies, and so we have a process that allows for that. So I'll talk about that today too. Don't worry, there's not going to be any kind of hard sales pitch or anything like that. This is just education. And at the very end, if you want more information, I'll give you a link. But just kind of sit back and relax. First, I'll show you the disclaimer, since I'll be showing some equity curves and that kind of thing. If you've never read this before, make sure you do. A lot of good information here. Don't trade with money you can't afford to lose. Past performance is not indicative of future results. And treat all the results you see, not just me, but any presenter today, and really anything that doesn't happen in your own account, treat that as hypothetical. So I always give the example, your next door neighbor could be saying, hey, I'm doing a great job trading. Look at my account, look at my trades. And that doesn't mean you're going to be able to do it. It's all hypothetical to you until it happens in your own account. So remember that. A lot of people lose money trading, so be careful. Okay, so for those of you who don't know me, I won 3 trading contest trophies in a real money year-long trading contest. So it wasn't one of these, 2-hour afternoon trading contests that some people out there claim to always win. Each of these years I did over 100% annual return. And again, that's real money. It was futures trading, which is what I primarily do. I've also written a number of books, and all 4 of them at one time have been in the bestseller list at Amazon. And the one towards the bottom, Entry and Exit Confessions of a Champion Trader, has actually been the top selling futures book for about the past year. So it continues to do real well. So you might want to check these out. And if you read Technical Analysis of Stocks and Commodities magazine, I write a monthly column. It's called Algo Q&A, where I answer people's questions. So, hey, if you have some questions on algo trading that you think other people would enjoy, just send me an email, and maybe I'll put it in a future issue. But that column actually won the 2020 Reader's Choice Awards from the magazine as the favorite article from 2019. So people are out there enjoying algo trading. I'm trying to help give them some education in those regards. And, not only can I trade myself, which is what I do, I can also teach people, and I've actually taught 6 other trading contest winners, and I've traded hundreds, or taught, not traded, taught hundreds of other traders out there. So I can kind of talk the talk and walk the walk. So just keep that in mind as you kind of go through what we're going to talk about today. So I'm going to talk about using entries as exits. And before I do that, I want to actually kind of give you some insight into why I'm even thinking of doing something like that. And the big reason is the way a lot of people do things there's just so many mistakes. And when you make a lot of mistakes, you get junky systems, right? You get junk strategies. So understanding where the mistakes are and where they can crop up will help you. And then that kind of leads us into what we're going to be doing with our entries. So, most people test incorrectly, and you can blame it on the software. You can blame it on people who just like to over optimize. There's a lot of excuses for it, but what most people do is they just take standard strategy. So maybe they'll just take a simple moving average crossover or a simple Bollinger Band. And most trading platforms have these things already programmed for you. And you think, wow, I just take this, combine it with some historical data. Oh, I'll just use the last couple of years because, I don't want to go too far back. I put all that in the optimization back test, where I can iterate on anything. I can optimize all the lengths and all the stop losses and all this stuff. And I can run millions of cases and get the best one. And people do this all the time. And then whatever comes out to be best, hey, that's the one I got to start trading. I mean, that one, out of all of these combinations, that was the best one. So I'm going to start trading it live. That's what most people do. And just in this little scenario, there's 5 mistakes. Using canned strategies, that's usually a mistake. Using only 2 years of historical data, that's usually a mistake. The interesting thing here is the less data you use, yeah, it'll be more recent, but it's a lot easier to build systems. So if you try building the same system with 10 years of historical data, you're going to get a lot more systems to fail. So that's why a lot of people only like to do a year or 2. It's kind of a sneaky way to get around it. Optimizing. If you're running thousands of optimization runs and all these iterations of trying all these values, chances are all you're doing is curve fitting. I see people on trading forums all the time. They pop up and ask, hey, I need a new trading computer because my system takes all weekend to run my tests. And I always kind of chuckle when I see that, because what I used to do is I'd reply to them and wouldn't give them trading computer advice. I'd say, maybe you're just doing too much optimization and maybe that's the real problem. And a couple of them got really mad at me over that. What do you mean? No, this is how you do it. And you don't know what you're talking about. And I just want a fast computer. And if you're not going to answer, just leave me alone. So I left them alone. But that's not the answer. Just because you can do something and you can run millions of cases doesn't mean it's a good idea. So that's a third mistake. Selecting the best overall parameters, it's almost never going to work. You can try this yourself. Just go and create a real simple system, optimize it like crazy, take the best results and watch them in real time for a few months. You'll pretty soon convince yourself this isn't a good approach. And then, of course, right away, they just start going trading. What did I just say? Hey, if you're going to try this, let it run for a few months. Well, most people don't. They can't wait. And I get it, because I used to do the same thing. I was so excited about finding a strategy that worked, that I said, oh man, I gotta run this tomorrow. I'm gonna turn it on because, oh yeah, this is gonna start making me all kinds of money. I get the excitement. A lot of people are like that, but that's another big mistake. So just right here in this scenario, there's 5 things that most people do wrong. So my simple advice, don't do this, right? Don't over optimize. Don't use the canned strategies. Don't start trading right away. You know, you got to take a better approach, and we'll talk about that in a bit. And really, that's just the start of mistakes. That's not even, you know, the end of them. That's just the beginning. This one is classic. So many people run back tests, and then they go and analyze the back test, and they'll worry about the areas I circled. Ooh, that's a big drawdown. Ooh, that's kind of a volatile range. I don't know if I'd like that. And they say, okay, well, I'm gonna basically engineer that out. I'm gonna adjust my system to eliminate those areas. Okay, okay, well, fair enough. And this is where a big problem starts, because people start testing and retesting over the same data. You know, they'll add a stop loss if they don't already. You know, that one's always a favorite. You know, you want a stop loss to prevent those huge drops in equity from one trade to the next, right? So a lot of people do that. And then they say, hey, I want to hear that cash register ring, you know, that cha-ching. So I'm going to add a profit target, and that should make things better. And then, you know, maybe they get something like this. You know, I took that previous system, added in a stop loss and a profit target, and I got this. It's no better. And then people start to think, well, maybe I'm just too simple. I need to get more complicated. And one of the ways is, hey, let's make some more complicated exits. You know, there's things out there called parabolic stops, and there's these real fancy trailing exits, chandelier stops. So they'll try all these things, right? And, you know, I'm sure if I could see you guys, there'd be a lot of nodding heads right now, because you've probably done this. I know I've done it. I don't do it now, but I used to do it. I used to try every single exit I could find with a particular entry and find which one worked the best. Well, all I was doing was just curve fitting. So you find out that doesn't work. Well, then maybe it's my entries. Maybe it wasn't the exits, and you try it all again. Try some new entries, try some new exits, and then get it more complicated, and it still doesn't work. And you know, you just go over and over, and what you end up doing is you're just running on this hamster wheel or gerbil wheel, where you create a strategy incorrectly from the start, then you optimize it, back test it, change the strategy to make a better back test, and you know, maybe you're stuck here for a long time, or maybe you jump on to trade step 3, which may not be any better, because you may start trading a system live, you lose money, and then you start all over again at step 1. Oh, I'm going to throw this strategy out. This is a loser. This is how most people trade and develop systems, and it's just, you're never going to get anywhere doing it. So what do? You know, what's the solution? Well, one thing is you got to try to do things differently than other traders, okay? If you take software, whether it's TradeStation, NinjaTrader, Multicharts, Pro Real Time, you know, there's a ton of different ones. If you just take their software and just use it the way everyone else uses it, you're not going to be doing too well. So, you know, first, don't develop systems like everybody else does. And how does everyone else do it? Well, I just showed you a little bit ago. Most people just take everything, optimize it to death, and then go start trading it. You don't do that. And then what you try to do is build your strategies a little differently. So don't just take the canned strategies just as is and just try them with a bunch of different parameters and see what works. And that's kind of what I'm going to talk about today. I'm going to build some strategies differently because I'm going to use entries as exits. And that's the whole flipping the script kind of thing. And I'll tell you, the way I came up with this, or really when I started looking into this, was about 3 years ago. I had a live event with about 30 traders, and they all came to Cleveland, Ohio for a weekend of both instruction and a lot of group work. So these were all people who had taken my online workshop, so they already knew how to build systems. They wanted to work together and build a whole bunch more. And one of the activities we did was to build systems where we used exits that were just entries. And so, you might be like, well, what is he talking about? I'll explain it in a second here. But what it is you normally use entries to exit the market, and you do a stop and reverse kind of thing, and maybe add a trailing stop or something like that. So here's a good example. This is your standard stop and reverse type system, okay? If the close is the highest close, then sell short. And if it's the lowest close, buy. It's actually kind of a counter trend type thing. You wouldn't think a highest close you should sell short, but it turns out this kind of thing works out good for stock indices. But the important thing here is when you're selling short here, what you're also doing is you're first exiting the long. The way TradeStation, this is TradeStation code, it's the way TradeStation is set up. So what you do first is you exit long and then you go short, okay? So that's just a stop and reverse system. So what I'm proposing here is instead of doing that, you just use this as an exit. So maybe you just say, if the close is the highest close, then buy to cover, which would, or sell. It should be sell. You sell your long position, not necessarily enter a short position, you just sell. The buy to cover would be down below if you were short, just to exit the short without going long. So this will be a little bit clearer here. Here's a good example of how this might work. Let me hit you with the spotlight. You're going short here, you're buying here. So it's a stop and reverse. And then here you go short, and it's actually then you get stopped out. Then you go short and you buy. So what the idea I'm talking about would be, instead of buying down here, you just exit your short. You don't necessarily go long unless you get a long signal. And it might sound like a subtle thing, but the fact is it could dramatically change your trading system results. And I'm going to show you that kind of as we go along. So here's an example. This is just an ES system with just a simple stop and reverse. And I just want to use that as a baseline just so you can see what's going on. So let's try this out. How would this actually work? Okay, so first, what I'll do is I have this code, and then what I'm going to do is I'm going to add another exit. So I'm going to leave this as a stop and reverse. So this could still reverse if this was hit first. But if you're long and the close is up and your open position profit is less than a certain amount, then you just exit a long position or you exit a short position. So it's more than just stopping and reversing. It's just exiting with those kind of entries. So where I got this from was from my book, Entry and Exit Confessions. This was just entry number 1, but all I did was modify the area in yellow and just made it an exit. So you kind of see what I've done there. And these results compared to that equity curve before, so. I didn't really try to optimize or do anything like that. I just wanted to see if it worked. And yeah, it improved your net profit, decreased your drawdown. Nothing spectacular, okay? But I'm more trying to just get you in tune with, hey, this is just a proof of concept that this thing could work. So then I tried it again. And I used a different entry from my one book. And by the way, you can use anything that's out there. You don't necessarily have to use any particular entries. But again, I just changed it to where I either just sell or buy to cover. And those keywords in TradeStation just exit long or short positions. They don't go in the opposite direction. So I tried that out, didn't really optimize it too much. I think I did a little optimization here. And the profit went up, drawdown went down. So, maybe there's something worth pursuing here. I stopped at this point, but you get an idea of what you can do. And if you think about what you could do is you could take all your existing strategies and then try out some of these entry as exit type things, and you can test out a huge number of things. So, think about if you just would take an entry and try 3 or 4 different exits with them, stop loss, profit target, trailing stop, break even stop. Maybe that's all you ever looked at, which is fine. But what you can do with this is now try a whole slew of different things, all your entries. And that's what people like creating anyways. They like creating entries, right? I mean, if you go to my YouTube channel, you'll see most of my most popular videos are entries. Something about entries, entry patterns, entry indicators, all sorts of things. So what you want to do is just use those entries as exits. And it's so cool. And a lot of people don't realize how much testing, how many more systems you can create by doing this. And I guarantee you, not a lot of people are doing this type of thing. Like I said, most people just take an entry, put a couple standard exits on it, and maybe try to do some exotic ones like the parabolic. Most people are not using entries as exits. And, the saying is most people lose. So think about doing something differently if you want to get out of that group, and maybe that'll do it. Okay, so let's just try the reverse code and try another example just to kind of get you comfortable with this. So on this one, highest close you're buying, lowest close you're selling. So this is just like a typical breakout system, except I'm just using market orders instead of stop orders. Okay, so it's pretty benign. It's pretty typical. I'm just taking a 5-bar high or low. I'm not doing any optimizing with it, but you get an idea here. You get the 5-bar low, you go short. You can't see it on the buy side, but that's kind of what it does. simple stop and reverse. Here's the equity curve, and you're laughing, right? I would be, because this is garbage. You would never trade something like this. Although there are people out there who'd say, well, hey, I'll just pretend that I start trading at trade 62 and just forget about that other data, and then it doesn't look as bad. There's another mistake people make. They'll just conveniently forget about it. And anytime somebody does that and they say, hey, I'm just going to forget about this because, oh yeah, that was 10 years ago or 5 years ago, or whatever. I'd say, okay, well, let's flip this. What if this would have looked like this over that period? Would you still have gotten rid of it? And usually the answer is, oh no, I would have kept it. And if you find yourself giving different answers depending on the results, then you know you're doing something bad. So just keep that in mind. I ask people that a lot, and once they realize that, yeah, they're just curve fitting, that's pretty much a definition of it, is taking results that you want and discarding ones you don't want. So you got to watch out for that. So here's our system. Nothing, right? So let's just try adding some exits. So now I'm going to try an RSI exit. If I'm long and the RSI falls below a certain threshold, then I exit. So I almost want it to stay in like an overbought area, because usually the price is going up when it's overbought, and that's when people start to panic, is they're like, oh, it's overbought, I better, it's a good time to go short. Well, a lot of times it's not, but when it comes back down, then it's kind of saying maybe it's time to get out. So I'll do that for the longs, and for the shorts, I'll use an RSI if it goes above, the oversold where it's real low. So here's what it does. Now all of a sudden this looks like a halfway decent system. I don't know if anybody'd want to trade it. I mean, what you're basically doing is flat and hoping for a nice period, another flat, maybe now we're in the start of another nice period up, and then maybe it'll go flat again, who knows. But the point is that little change of using that entry as an exit had a pretty dramatic effect, and that's what's pretty cool. So there's probably no way, if you go back, there's no way to use stop losses and break-even stops and those kind of things to get the performance of this good. But using RSI in this case made things a lot better. So that's one thing. So here's another one, ADX. Everybody uses ADX as a filter, right? And they say, well, we're either in a trend mode or not a trend mode. So in this one, all I'm doing is I'm saying, if the ADX is below a certain threshold, meaning I'm not in a trend, I'll then just sell if the close is above the previous close. So, you can play all sorts of games with this, but if you were using this as a pure entry, you might switch this around and have the ADX above a threshold, to say it is in trending mode. There's a lot of different things you can do with this. So what does that look like? Okay, well, that looks a little bit, it looks different, certainly. I don't I don't want to say it necessarily looks better, because now you're going down, but now you're kind of going up here rather than completely flat, and then you're going up here. I'm not saying this is a tradable system, but again, it's the concept I'm trying to bring across, that, hey, this is something worth testing. And like I say up here, it's not that great, but it's an example of, hey, you just have to test these things. And when you do, that's when you start progressing. Okay, one more. I'll show you one more with standard Bollinger Bands. And again, instead of using the Bollinger Bands to go long or short, I'm just using them to exit a strategy. simple enough. And here it goes. So now it kind of looks like sort of both of them sort of flat like that first one and then going up like the second. And the profit's better. So compared to that core strategy, we tripled our profit. And I'm pretty sure I didn't look at it, we've lowered the drawdown. So it's gotten better. System's gotten better. And again, that just gives you an idea of what you can do with these exits. So what have we learned with these exits things? First, using entries as just pure exits, not as entries, can definitely improve a strategy. So here I've showed you a couple examples, and these weren't cherry picked. If I was cherry picking something, I'd show you something really good. I don't do that. I just show you, hey, this could work. And I do that for specific reasons, because I don't want you going off thinking this is all you have to do. But it's a tool, and it's a tool in your toolkit that, hey, when you have an entry you like and nothing seems to work on some limited data, well, maybe try using this entry as an exit. And sometimes the results are going to get worse. We saw a couple cases where it didn't really improve things, and I guarantee you there's cases where this makes it worse. This isn't a cure-all for all your entries. Some entries are going to be bad no matter what you do, and there's not going to be a way to make them better. But this is a great way to expand your testing universe, expand the number of tests you run, because those of you who are doing algo trading right now, really it's all about the testing and how much you can test. It's not about getting that perfect back test or anything like that. It's about testing a lot of things to find something that works and testing them properly. And then the final point here is this makes strategies a bit unique. And that's a good thing. You've probably seen some other presentations I've done where I've talked about other ways to make strategies unique. Instead of a 60-minute bar, use a 59-minute bar or a 61-minute bar. Things like that, where you do things differently than most people. That's where you can find some things. Because I guarantee you right now, there's probably 100 people across the world, there's probably more than that, but who right now are probably testing Bollinger Bands on strategies to see how well they work. And you have all these people doing all the same testing, and they all find the same sort of thing, then they all trade it, and then whatever that was and any benefit there was to it, it just disappears. So that's what you gotta kind of remember. Okay. And really, the entries, exits, using entries as exits, all this other stuff, that's not the key. The real key is how you develop your strategies. You've got to have structured testing. And you'll see any of the other speakers today, they'll tell you a lot of things. Oh, try this, try that. Those things could definitely work. What I would recommend before you go and trade them is test them. Put them through some rigorous testing. And I've listed some of the tests that I run as part of my process, but let them prove it. The worst thing you can do with anything you see trading wise is just take it as a given. Oh, Joe Blow said breakout entries with a 5-day breakout work great in every market in every time frame, so I'm going to go start trading it. That's crazy. That's a sure way to the poorhouse. You test. That's what you do. And that is the true key to having any kind of success in algo trading or any kind of trading really, is test out what you're doing. If you can't test it and prove it works, I'd be highly, suspicious of it working. You know, the flip side of it, and where people get caught up, is just because something has worked historically doesn't mean it's going to continue to work. And that's a tricky one. You know, you could have 10 years of something working and it could stop working tomorrow. And that does happen. It happens to all of us. But I'd rather have that than a strategy that I know did not work for the last 10 years and hope it starts working all of a sudden. Nobody would do that, right? But a lot of people will do the in-between where they just have no idea what the strategy did the past 10 years and still hope it works going forward because somebody said it worked without showing them any proof. Ask for proof. Okay, so, you know, I mentioned a lot of testing. The process I use, this is it. It's a trademark process, but I go from goals and objectives all the way through real money operation. And there's testing you have to do. Now, you might say, wow, hey, do I have to follow your thing? Absolutely not. You can develop your own successful process. I'm going to kind of lay out the steps for you right here. So here's what you do. You develop about 50 to 100 or so. You want enough of a statistical sample. And you develop them all with the same exact process. So if you're going to use optimization, you do it the same way. If you're going to watch them in real time, you do it the same way. If you're going to trade them live, you do it the same way. Whatever you do it the same way because you want a repeatable process. And then you watch them in real time for a couple of years. Make sure they perform, right? Because what's the point of having 100 great back tests if you don't know how they perform in real time? But if you do know they perform over 1 to 2 years, you can say, hey, I have a good process. So therefore, I can keep building strategies and I feel confident. Unfortunately, what happens to a lot of people, what happened to me way back in the day when I first started doing this, a lot of my strategies weren't doing good. And so I had to adjust my process, my development process, until I got things that were good. And then you have to create more strategies to prove that new process out, right? And you keep going back and redoing this over and over again, but it's the way to prove something works. And then, sorry, I don't know why I just showed a sunset. That was my screen background. So you keep doing this and you continue until you give up or you turn profitable. I mean, so you can definitely do this on your own. It's just not a very easy thing to do. But, you know, whether you do it on your own or follow somebody else's proven approach, make sure you have a proven approach. That's the key. That's how you put yourself ahead of the pack. So kind of what we talked about today, avoid common development mistakes, do things that are unique. And so what I gave you today was something unique that not a lot of people are doing. I bet of all the people I've talked to over the years, maybe 10% of people say, hey, I'm going to use my entries and just use them as exits. Most people don't do this. And finally, however you develop strategies, make sure you have a process. Don't just test one thing to death, but not test another. Don't blindly follow what some guru says is a good system. Make sure you test things properly, okay? So with that, I'll wrap up. And if you're interested and want to learn more, go to my website. If you go to kjtradingsystems.com/free festival, it's a special link just for a festival of trader watchers. And you go there and I give you an algo that you can take and play with and do whatever you want. Then I also give you a bunch of ideas to help start your own trading a little bit, algo trading. So if you want to learn more, go there. And with that, I'll turn it back over to Dave and I just want to thank you guys for listening today. I appreciate it.